And we're back. So let's just get right into it. Today I want to talk about using the equity that you already have in your house to your advantage and tapping into this through a home equity line of credit or a home equity loan. The purpose of this is using your home equity as an asset to be able to use it for other investments, including possibly a down payment on a rental property. So they're both a little different, so I definitely want to talk through the differences and then the pros and cons of both of them. So the goal here is being able to tap into our equity, and that's the equity that we've already put into our house through our down payments, our monthly mortgage payments, and then also the appreciation that our house has had since we closed on it. And the reason that these two are great assets is because it's a loan against a secured asset, which is your home. So that means the interest rate is really low compared to other types of loans that you may be able to get. So a home equity loan, you're essentially refinancing your house to tap into that equity, and you get that equity essentially in a lump sum. You can then use that lump sum however you please. So the benefit of a home equity loan is that you're getting this at a fixed rate, which means your interest rate will never change no matter how the economy is doing. The downside, however, is once that money is used, you can't reuse that money. It's just one lump sum all at one time, and once it's gone, it's gone. On the other hand, you have the option for a HELOC, which is a home equity line of credit. So this credit is revolving, which means you can reuse it as soon as it's like a credit card. So once you pay the part that you've already used, you essentially have access to that line again and again. The issue here is that HELOCs usually come with a variable rate, which means that over time this payment can increase or decrease. You really don't know. I think they're both great options, and I don't have a preference of one over the other, but I do believe you should use that money responsibly. I don't recommend using it for a vacation or to buy a fancy car. I believe when you're tapping into assets like this, you should definitely use it for another investment. Another thing to keep in mind though, they are still loan products, which means they come with a hard credit inquiry, and then usually they also come with closing costs unless the lender is willing to waive those in certain cases. And usually banks don't want you to access more than 90% of your home's value with your first mortgage and the equity you're accessing added together. So again, they don't want this value being over 90% of your home's value, just in case home values do drop, because then you would be in a bad financial situation. So yeah, HELOCs and home equity loans are great if you're already a homeowner and are looking to get into real estate and rental properties, and it gives you a chance to access the equity that's already in your house. If you don't own a home already but are looking into real estate and rental properties, I recommend my first video, which is an overview of the FHA program to basically buy rental properties with very little money down. So that's it for today, guys. If you liked this video and found it helpful, please like the video and please subscribe. I do put out weekly content regarding real estate. Thank you so much.